Coming up, we'll bring you the latest developments on the China Eastern flight that crashed earlier today with more than 130 passengers on board. This is Bloomberg. About that all day yesterday.
So, a Boeing 737 operated by China Eastern Airlines has crashed in the southwestern part of the country. There were 132 people on board, that's passengers and crew. The aircraft was a Boeing 737. It wasn't the latest version, the MAX, it was the version before that. Joining us now, Bloomberg opinion columnist Brooke Sutherland. Brooke, we don't know what caused this crash yet, but from a Boeing perspective, while that matters, what does this mean for them and their place in China?
Sure. I just want to reiterate what you said, that there's still a lot that we don't know now, but it does seem relevant to me that, in the aftermath of this, you've seen that airline, China Eastern, ground its entire 737-800 NG fleet. And so that seems to me to signal, an attitude of, blunt instruments when aviation safety is concerned while we wait for some of these facts to come out. And I think given that, you do have to wonder what this does for the timeline of the MAX resuming commercial flight in China and allowing Boeing to resume deliveries to that country. To your point, this is a different model. This is not the MAX, which has just gone through a very rigorous recertification process following those two crashes. But I think, China is looking to be, a more respectable authority as far as aviation safety is concerned. They were the first to ground the MAX in the wake of those two crashes, and you have to think that they would take a very careful approach from here.
Brooke, not to minimize the human impact of the crash, but let's talk about that regulatory kind of standpoint when it comes to China. What is perhaps the worst case scenario here when it comes to Boeing and China kind of getting back on the same page? You have Boeing stock, for example, down 5.5%. Can you speak to a little bit about what the consequences are?
I think the concern is if you are not delivering planes to China, it becomes very difficult to clear out that inventory of MAX jets that Boeing built up during the course of the grounding. As of January, they had about 335 undelivered MAX jets in their inventory. And if you can't clear out that stockpile, then it raises questions of, well, how do you justify that 31 jets a month production pace that Boeing was targeting for early 2022? It's just hard to see how you get there without China demand, China deliveries. We have seen, of course, other airlines increasing their orders. This is a much better aerospace market than it was even just 6 months ago. But you need China if you're Boeing. And so, I think any kind of delay there does raise question marks just about the timing of that pace. And the reason why that's important is we've seen the aerospace supply chain already struggling to ramp up output as they come out of the COVID doldrums. You have labor issues, you have casting and forging issues, and it's very important to have a clear timeline as you try to work through all of those.
Just to wrap this conversation up, the NG historically, statistically, is a very safe aeroplane, isn't it? Just briefly, Brooke.
Yes, it is. Absolutely. I mean, this is the previous generation before the MAX. It's been around for 25 years. It has a very, very good safety record. There's no known problems with this plane. And, like I said, there's still a lot that we have to learn about what exactly happened here. But it seems, unlikely that there would be systemic issues just based on what we know so far. But we'll learn a lot more in the days to come.
Brooke, thank you so much for that. Brooke Sutherland of Bloomberg Opinion. We'll have more next. This is Bloomberg. We're an hour into the U.S. trading session. Bloomberg's Abigail Doolittle is tracking the moves. Abby, a little bit of a risk-off mood.
Yeah, a little bit of a risk-off move, a little bit of a breather from last week's big rally, because of course last week was the best week since November of 2022, or 2020, excuse me, around the time of the presidential election. That was the degree of the buying power. So today, investors, bulls, taking a little bit of a breather. The S&P 500 down slightly, the NASDAQ down pretty sharply, down 1.3%. This, of course, yields are rising, pressuring tech stocks more so. The Russell 2000 down about 6%. 0.6%, so small cap hanging in there. And then that VIX, it is below 25. So it seems as though this is just a little bit of a consolidation, very low volume. As for the S&P 500, and I know that Greedy is a bull right now, so this chart supports her. This is the S&P 500 relative to its 50-day moving average and its 200-day moving average. Recently, there was a death cross. The funny thing for the S&P 500 is often those are bullish signals. It is confirmed right now for, I would say, 4,600, maybe even 4,700. Unlikely that there's a new all-time high, but you never know because, of course, there is that statistic that every time the S&P 500 puts in a weekly gain of more than 6% or an index puts in a gain of more than 6%, a year later it is higher. But certainly in the near term, it looks like the S&P 500 is headed higher. As for commodities, it's a bit of a mixed picture here. Really wild moves. New York crude up 6.1%, back above $111 per barrel. In the chart, this looks like it's probably more of a counter trend rally. The trend being the sharp downtrend, the correction from that parabolic move up. And in other words, it seems as though oil may be lower at some point in the days or weeks ahead. Gas is sharply lower, aluminum higher, and then you have nickel plunging once again. Very similar to that oil chart guy is nickel, parabolic uptrend, and then the correction down.
Still a long way to go to catch up with where Shanghai prices have come down to. Abigail, thank you very much indeed. Abigail Doolittle updating us on the markets. Germany wants to reduce its dependence on Russian energy. It's now working with Qatar on a LNG deal. That raises a question. If enough countries follow Germany, will it ultimately hurt Ukraine, which is a major transit point for Russian oil and gas? With us now for an exclusive interview is the CEO of Naftogaz, Yuri Vitrenko. Naftogaz is Ukraine's state-run energy company. Sir, thank you very much indeed for taking some time to speak with us today. Mr. Vitrenko, Ukraine, its government, would like the West to cut itself off from Russian energy. Why doesn't Ukraine simply say enough? Why is Ukraine still allowing Russian gas to transit its country?
I would like to apologize for the picture because there is an air raid alert and I'm in a shelter, so sorry for that. And now answering your question. The question of the transit through Ukraine to Europe is a very sensitive one, and it's being discussed at the highest political level and not just in Ukraine. So currently the decision is that as soon as technically possible, we continue transiting Russian gas.
Yuri, can you speak to us a little bit about the capacity of those flows? We know that Ukraine the flows from Russia through Ukraine have actually increased since this conflict began. Can you speak to us a little bit about the capacity and also how Russia is actually getting paid here?
Yes, we have enough of capacity. In fact, Russia is using currently only about 1/3 of the available capacity to transit gas through Ukraine. It increased even before the war for different reasons, and currently they're just using the contracted capacity. We also understand that as soon as gas continues to flow through Ukraine, it's not just a matter of some payments that Russia is making and we're getting this money, but it's more about at least some deterrent in terms of protection of our infrastructure. That they won't bomb the very infrastructure that they're using themselves to sell their gas in Europe.
Sorry, can I just be clear here? So the Russians, Mr. Vitrenko, are paying you for that transit. How is that financial arrangement working? Is it being paid in rubles? Is it being paid in dollars? How does the money get transferred? I'm just asking because I'm curious, as given the financial situation that we see in Russia right now and the sanctions that are being applied, how does it work in terms of the payments to you?
No, we're talking about hard currency, euros and US dollars. Unfortunately, the financial sanctions against Russia contain some very important exemptions for banks like Gazprom Bank and the Sberbank. So that is why major Russian companies can still use their account in the West to get money for the exports of oil and gas. And by the way, that's the reason why we're saying that it should change. Even if Europe cannot get rid of its dependence on Russian gas and oil overnight, at least it should not allow Putin's regime to get money for the exports of oil and gas, and that's why escrow accounts should be used. So they should be able to get this money only on this escrow account, and until they withdraw their troops from Ukraine, they cannot get access to this money.
Yuri, can you speak a little bit to simply the willingness to hurt some of the infrastructure that is in Ukraine, just given that Russian supply that goes through? Is there any sentiment here that simply the flows that go through Ukraine helps kind of prevent further destruction?
So it's obvious, by the way, that they are really trying not to damage the transit infrastructure. So it's really opposite, for example, to some distribution infrastructure. In major cities in Ukraine, like in Mariupol, they're targeting the civilian infrastructure to create a humanitarian catastrophe and to put some pressure on the Ukrainian government through creation of such a humanitarian catastrophe. But when it comes to the transit infrastructure, it's obvious that they're very, very careful not to damage it. So there is no bombing of the transit infrastructure, and there is no even shelling of the transit infrastructure. So that's why it's obvious for us that they don't want to hurt their own commercial interests and their commercial relationship with the West.
Mr. Vitrenko, has there been any discussion between Naftogaz and the government about cutting the Russians off? They don't want to damage the infrastructure because they need the hard currency which ultimately flows from selling the gas. That is supporting their economy and their war efforts. Has there been any discussion between you and the government about saying no more? We are going to cut this off. You are not going to be able to use our territory to transit your gas to the West and be paid hard currency for it?
I cannot disclose details of political discussions that we have with Russians and we have with the European Union and I have with the President of Ukraine. But as the CEO of the company, I have to, provide uninterrupted transit as long as we have technical capacity and technical capability to provide such transit. That's our position. So again, politics is the most important thing in this kind of decision making, of course, but at the same time, since it's a very politically sensitive question, I cannot now tell you what this decision making is about.
Mr. Vitrenko, Russia, it looks like, has entered 2 compressor stations in Ukraine, I believe 2 of the 4 that essentially transport some of that gas to Europe. Can you speak a little bit about the situation there? What's the update?
Yes, Russian troops entered now already 3 compressor stations in eastern Ukraine. They harassed our personnel and they tried to intervene. We warned Gazprom that it creates some technical risks and maybe it will cause, again, some interruptions of transit. After that, Russian troops started to behave differently, but they're still around. So the situation is far from being normal because people are still blocked on some of these compressor stations. Russians are still trying to intervene, but at least there is no physical damage, and at least they're trying to be careful in terms of what they're doing there.
Yeah. Mr. Vitrenko, so you are still in control of all of the necessary infrastructure in terms of piping gas from Russia into Europe. Naftogaz is still in control of that infrastructure?
Yes, at the moment, yes.
Okay. One final quick question from me. We've seen today Germany talking about signing long-term LNG deals with Qatar, and potentially we could see other countries going down the same route as well. Ultimately, do you think over the next few years that Europe will be capable of ending its reliance on Russian gas?
For sure, we're saying that Europe is even now capable. Yes, it will result in somehow higher natural gas prices and oil prices, but this price will be still lower than the price that we and humanity is paying for this barbaric invasion by Russia. So that is why, despite the fact that we will lose transit revenues again, we don't care about that. We care about stopping this war and saving lives. That is why we're saying that Europe should end its dependency on Russian gas and oil as soon as possible. It is possible. It's possible even in the short term.
Well, Yuri Vitrenko, the CEO of Naftogaz, we thank you so much for your time, and of course we wish you all the safety. Thank you so much for joining us under your circumstances. Coming up, President Biden has banned the import of so-called rough diamonds from Russia. We'll see what this means for the largest diamond retailer in the United States. The CEO of the company that owns Kay Jewelers and Zales, Gina Drosos, she's coming up next. This is Bloomberg.
Up to date with news from around the world. Here's the first word. I'm Ritika Gupta. Russia's attacks on Ukraine has forced 10 million people to flee their homes. That's almost a quarter of the population. That's according to the United Nations. While most of the displaced people have stayed in Ukraine, about 3.4 million people have fled to other countries. 2 million of them are in Poland. President Biden's administration will brief business executives today on the impact of Russia's invasion of Ukraine and the sanctions that followed. Amongst the companies at the meeting, ExxonMobil, ConocoPhillips, JP Morgan and Bank of America. And here in New York City, apartment sales are sizzling. Restaurants are booking up and COVID mandates are fading away. But all that's hiding some deep economic pain. New York's unemployment rate sits at 7.6%, amongst the worst of major cities, and workers still aren't flocking back to offices. That's ratcheting up pressure to reinvent the city's economy. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg Quickie.
Ritika, thank you so much. It's the largest diamond retailer in the United States and owns Zales, Kay Jewelers, and Jared. Last week, Signet said it would no longer buy stones mined in Russia, which is the world's biggest source of gems. Joining us now is Signet CEO Gina Drosos. Gina, thank you so much for joining us. We really appreciate it. Wearing lovely diamonds. We appreciate that.
Well, thank you. My team would be proud.
Well, I'm sure they would be. Let's start talking about this kind of Russian impact here. We know, like I said, largest source of diamonds here. How does that affect the supply chains where you're getting your diamonds from? Can you speak to us a little bit about the sourcing?
Sure. Well, first and foremost, I would say our thoughts and prayers go out to the people of Ukraine. We are a purpose-driven company, and so it was very important to us to take a stand that we think is consistent with what our consumers desire. So as soon as this conflict started, we immediately stopped directly sourcing any diamond or gemstones from Russia, and we've asked our vendors to do the same. We have a promise to our customers. We have for more than a decade that everything they buy in a Signet store has been responsibly sourced, and we need to maintain that promise. We also made a donation to the Red Cross to help people on the ground in Ukraine.
In terms of the impact that this has, Gina, where do you get the diamonds from next? Is it Botswana? Are there other sources that you're now tapping?
Yes, we source diamonds from many different places in the world, Botswana, Namibia, Australia. We work with only suppliers who we are certain responsibly source those stones. And so we're agile enough now to shift our supply chain. We also know that customers are interested in other kinds of jewelry, gold, for example, and we're a very innovative company in terms of being able to bring new and different jewelry into the marketplace.
Let's talk a little bit about weddings here in particular. I believe Signet has said they're going to be a 40-year high for weddings. I believe I read a story that the cost for weddings is going to get more and more expensive from here. As a bridesmaid, I'm not thrilled about that. But let's talk a little bit about the opportunity for you and for your company in particular. Does that mean increasing prices to seize the opportunity, or increasing volume? What does that look like?
I think it really means increasing services. We think of bridal as an entire experience. Often an engagement ring is the most expensive purchase that a couple has ever made together. And so we start with education and experience and expertise. We help them choose just the right stone in the right setting. But then it goes beyond that. Groomsmen gift, bridesmaids gifts, mother of the bride. This year we actually have a really interesting new program where we're offering rental jewelry for the bridal party so that everyone can look their best on the big I do day.
In terms of I'm not sure there probably is an average ring. Of course, there probably isn't an average ring. But in terms of the kind of cost inflation that you're seeing, Gina, right now, in terms of the cost, you talk about this being the most significant purchase that a couple will probably make. How much more expensive is it now? How much more expensive is the diamond? How much more expensive is the gold? Platinum, obviously, a lot of that platinum comes in from Russia. Can you just give us a sense of the inflation rate that we're seeing in terms of the costs?
You know, I think it really depends. We actually, as an international source opportunity and as a mid-market jeweler, really pride ourselves on being able to value engineer all of our products so that we keep those at an affordable price. We want everyone to be able to express, love to whoever they want to. So very important to us to use that global supply chain and really keep price increases to a minimum so that jewelry is still very affordable for our customers.
Well, let's talk about, I'm going to stick with the inflation question here for Guy. What happens when you kind of see perhaps this big opportunity that you're planning to seize on, but then kind of the ramp down from it? There's a lot of questions in the market right now about the spending ability for the consumer. A lot of people spending on travel instead of jewelry, for example. Mm-hmm. How is your company prepared for that?
I think there are two answers to that question. One is that we see in inflationary times that people typically shift luxury expenditures into jewelry. because golds, gemstones, diamonds have inherent value and they grow in value over time. But we do expect for category growth to tail off a bit. Signet had very exciting performance last year. I'm very thrilled for our team. We delivered 50% revenue growth. The category, though, was up 20%, and that really reflects people coming into the market to express love for those that are closest to them.
If costs are higher, does that mean people come more to you as a larger group where you can keep costs down? And does that encourage you to think of the opportunity to roll this industry up? This is a heavily fragmented industry, as you know, Gina. What are the roll-up opportunities, and does a rising cost picture encourage that process of consolidation?
Well, I'm very proud of the work that we've done on our supply chain. We've become significantly more vertically integrated over the last several years. In fact, I announced at our earnings call last week that we are 10 times more vertically integrated than we were just 2 years ago. That's a cost savings for customers. And it's not just there. We've built a muscle in our company of being agile and being able to drive out costs that customers don't see or care about. What we've done is invest that in growing the category. And then we're trying to achieve a disproportionate share of that growth. We are the largest player. We offer a variety of price points. An engagement ring at Diamonds Direct or at James Allen is often more expensive and sometimes larger, sometimes, different than at one of our other banners. So it's the wide variety, I think, of price points that we offer within each store and across our entire company and the supply chain advantages we have that will keep us as a great value for customers.
We'll wrap it up here with one last question, and we'll kind of end the conversation where we started with here, the impact of Russia in particular. I want to draw on your expertise on the industry broadly. So if you, for example, in your company, Signet, is banning these Russian-sourced diamonds, in your opinion or in your expertise, where do they go? What happens to those diamonds that are being unused?
Yes, I think that most U.S. companies are coming alongside us, and so customers here will feel very confident buying. Many of the larger Russian diamonds already go to Asia and the Middle East, and I believe that supply chain will continue to be a potential source over time.
Gina, great to see you. Thank you very much indeed for stopping by to see us.
Yes,
Gina
thank you.
Signet Jewelers CEO. Thank you very much indeed. Yields going higher. US 5-year up 10 basis points, 2.24. This whole story of higher yields. It's going to be really interesting to see what Powell says. I think we're going to get the comments now, 12:30 Eastern. We're looking forward to that. This is Bloomberg.
It's time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. I'm Rishika Gupta. There's been a board shake-up at Credit Suisse. Vice Chairman Severin Schwan is stepping down from his role along with other members of the board. Credit Suisse is reeling from a series of scandals earlier this year. Antonio Orta-Ozario was ousted as chairman after just 9 months on the job. Goldman Sachs has executed its first over-the-counter crypto options trade. It's one more step in its expansion of digital asset offerings to Wall Street investors. Goldman traded a non-deliverable Bitcoin option, a derivative tied to Bitcoin's price that pays out in cash. And it is another big deal by a cash-rich private equity firm. Thoma Bravo has agreed to buy U.S. enterprise software company Anaplan in a deal valued at $10.7 billion. Thomas offers roughly a 30% premium to Anaplan's closing price on Friday. The company sells subscriptions for cloud-based business software and provides analytics services. And that is your latest business flash, Guy.
Ritika, thank you very much indeed. I want to check what's happening in the bond market. Equity markets, I think, were interesting last week. Monday morning feels like it's definitely focused on what is happening when it comes to fixed income. 2s, 5s, 10s. Take a look at the numbers at the top. They are useful and instructive. The US curve unbelievably flat right now. The inversion starting to bite and take hold. You can see it in the 5s to the 10s. Critty, you got an inverted curve. Does that not shake your inner bullishness right now?
It doesn't shake my inner bullishness yet because that inverted curve does not necessarily translate to every other curve. The 2s, for example, hasn't inverted yet. It's just the belly for now.
For now.
For now.
For now being maybe the operative phrase at the end there. We'll see. Yeah. Plenty still to discuss. We're going to carry on the discussion. We'll talk more about Critty's bullishness with our next guest, Hannah Gooch-Peters, Sanlam Investments Global Equity Analyst, joining us next. That is coming up. This is Bloomberg. Monday the 21st. Stocks are mixed. The story's in bonds. Yields surging higher. The next hour of Bloomberg Markets starts right now.
From the financial centers of the world, this is Bloomberg Markets with Alex Steele and Guy Johnson.
Okay, let's walk you through the price action. Let's talk about what's happening. Stocks here in Europe higher, but not by much. We're up by 0.2%, but we are higher, which is significant. 455, nearly 456. I think the action is elsewhere. Brent crude up by another 6%. Building on the last few days, we're now trading 114 on the global benchmark. We're up by $6. But here's where the real story is. I think it's on both sides of the Atlantic. You can see what's happening when it comes to the bond market stateside. In Germany, we're up by another 6, nearly 7 basis points. The UK moving up 11, nearly 12 basis points. Yields moving higher. Does that feed back into stocks? Critty, you're very bullish. Does the bond market start to undermine that case a little bit here?
It is a lonely life. I lead as a bull, but I'm going to stick to it. Here's what's going on in the stock market, though, right now. The S&P 500, a little bit of green. You know, it came out really handy 2 seconds ago. I looked, and we were actually down in the market. Maybe an early sign that this bounce is actually here to stay, going back to our question of the day. But, Guy, it all comes down to your point, to the oil story, which, of course, is still positive. You are still seeing a over 5% gain. That is more than a 1 standard deviation move when it comes to WTI, hovering at $110 a barrel. What's significant, to your point, is the read-through into the bond market. Because take a look at this. It's that belly of the curve that is starting to invert. It is now in negative territory. Usually, that's kind of this forecaster, this crystal ball for a further inversion in those more vanilla curves. The 2s, 10s, for example, signaling a recession may be on the way. But be careful here, because the bond market, it's actually just pricing in a very aggressive rate hike path into eventually what will be a policy reversal. But as Stephen Englander over at Standard Chartered did actually come out and say, he said, well, the Fed is kind of doing this dating without commitment dance. And that's really where you see what the Fed is pricing, or what the market is pricing around the Fed. That could very much change. And that's really where I think you have some of the support for the bull case. Nevertheless, you even see the 2-year yield above that key 2%. Does it stay there is the question in the face of those geopolitical tensions.
Would 50 basis points to the Fed shake that story? Critty, we'll come back. We'll discuss what's happening in the bond market in a moment. Let's focus now on what's happening in terms of the politics and the geopolitics. President Biden's phone call with the leaders of France, Germany, Italy and the UK expected to be starting sometime around now. Basically, these leaders are looking to coordinate their response to the Russian invasion of Ukraine. Let's talk more about this and what the rest of the week looks like as well. Anne-Marie Jourdan is in Washington, Aggie Cantrill on the Ukrainian border with Poland. Anne-Marie, let's start with you. What does the Biden administration want out of this haul ahead of the president's trip to Europe later this week?
Yeah, not sure there's any deliverables for this call exactly, but it does come ahead of the president making that trip across the Atlantic to meet with his counterparts in person. And potentially that's what this call is setting up. What can they deliver? And they come out of 3 extraordinary meetings, a NATO one, an EU summit, as well as a G7. So potentially this is going to set the scene of what each country potentially can deliver in terms of any more penalties or sanctions on Russia, or any more humanitarian aid they can give to Ukraine. We should also note the president was announced last night from the White House that the president would also be going to Warsaw, of course, not far from where Aggie is on that border. But Guy, we should also just quickly note this comes as well after the president's discussion with Xi Jinping on Friday. This is also ahead of the EU having their own summit with China April 1st. So potentially making sure they're all in alignment on how they're going to communicate with Beijing.
Anne-Marie, outside of the United States, outside of the European Union, there are reports about deals being made in ways to keep that Russian trade relationship alive. Saudi Arabia, for example, is one. The United Arab Emirates, India, for example, talking about rupee-ruble exchanges as well. I'm curious what the West can actually do to address some of that, or is this something that they kind of have to throw their hands up in the air for?
I think you'll see a lot of pressure from the administration on these countries, but also it's still happening in terms of the European Union. Nord Stream 1 is flowing. They're making millions and billions of dollars. Russia itself coming from the U.S.'s closest partners in Europe. So there's no doubt that Russian trade is continuing, even though the fact that these penalties and sanctions from the West and other allies in Asia as well, like Japan, like Korea and Singapore, are hampering and hurting the Russian economy.
What will the president bring to Europe in terms of assistance when it comes to energy, do you think, Anne-Marie? We were hearing from the Germans a little bit earlier on, talking to Qatar in Doha, talking about the idea that we are going to see LNG flowing into Germany. In terms of how closely aligned we're going to see Europe and the United States on energy policy going forward, what can the president deliver for Europe there? And how much of this trip is going to be a focus on that critical part of this picture?
Well, the United States already banned Russian imports of fossil fuels. It really comes down to, if you want to hurt the Russian economy, it's having Europe do it. The problem is, guys, you outlined, they're just too reliant. And when you talk about Minister Habeck's trip to Doha, this quote, I think, sums it up, Guy. He says, "We might still need Russian gas this year, but not in the future. It starts like this. So he who has ears should start to listen." Now, that was obviously a little bit of threat to President Putin. And you have Germany now looking for new gas in Doha for LNG. You have the United States exporting LNG to Europe. The issue is Europe just isn't set up for this kind of infrastructure, but they are trying to. And that's what the German Economy Minister Habeck was trying to get away in Doha, also visiting the UAE, putting Russia on notice that we may need you this year, but we're going to try to loosen our dependence in the years to come.
Bloomberg's Anne-Marie Hordern. Smart stuff as always. Thank you so much for your time. Well, Russia's attacks on Ukraine has forced 10 million people to flee their homes, almost a quarter of the population. That is according to the United Nations. About 2 million of them have fled to Poland. Let's bring in Bloomberg's Aggie Cantrell, who's along the border of Poland and Ukraine. Aggie, thank you so much for joining us. Talk to us a little bit about the path of some of these refugees, the 2 million that I just mentioned. Are they sticking in Poland, or are they going to, or looking to move further into Europe and perhaps even the United States?
Hi, so yes, a great deal of the refugees who've come over are staying in Poland or in the surrounding countries, the countries that surround Ukraine. That's a concern on a part of many of them because they're hoping to return home at some point in the near future. However, there are also those who, especially if they have contacts in other countries, they're going there. So I've spoken to refugees whose family members or friends are based in other European countries, and that's sort of the choice that they're making. If they have somewhere to go, then they'll go elsewhere. But otherwise, it is still pressure on countries like Poland and Slovakia and other nations on Ukraine's border that they're taking in the brunt of the refugees.
Aggie, what are these people telling you as they cross the border? What are they hearing from their homeland in terms of the action that is being fought there? Over the weekend, I think we got a sense maybe that there is an increasing concern that Russia is holding talks not in good faith, that ultimately there is going to be a long and drawn-out conflict here. Is that the growing expectation of the people that you talk to?
I think a lot of the people that I'm speaking to, especially if they come from areas that have had to deal with heavy bombardment, places like Mariupol or in Donetsk and Lugansk, people who are leaving those areas who have often, before they've arrived in places like Poland, they've been internally displaced. They've been part of that large figure of people who are internally displaced within Ukraine, that maybe for a lot of them, while they're not necessarily able to go back to their own cities, they're hoping to be able to potentially return to Ukraine at some point. And that is also putting a lot of pressure on the cities like Lviv in the west of the country that are taking in a huge amount of people who are displaced internally within the country.
Aggie, always great to get your reporting. Thank you as ever. Aggie Cantrell joining us from the Polish-Ukrainian border. This is Bloomberg.
Bloomberg has the Fed covered all week. Today, live coverage of Chairman Jay Powell speaking at the NABE Economic Policy Conference in Washington, D.C.
We do feel the economy is very strong.
Then, additional Fed president interviews throughout the week.
Markets are going to have to price that risk.
Balance sheet policy is just another part of our policy toolkit.
The most in-depth coverage and analysis of the Fed.
Which meeting matters?
Every meeting matters.
Starting today on Bloomberg Television and Radio.
We're definitely counting you down to Powell's speech a little bit later on at NABE. Some great coverage coming up on that. But let's refocus now on what is happening in Ukraine. The country rejecting a Russian demand that its forces in the southern city of Mariupol surrender. The city has been under heavy bombardment, as we know. Joining us now, Elizabeth Brawl, resident fellow at the American Enterprise Institute. Elizabeth, thank you very much indeed for your time today. There has been growing expectation over the last few days that there could be a relatively quick way out of this conflict. There was talk last week that the conversations between Ukraine and Russia might actually deliver that. That now seems to be cooling a little bit. What is your assessment of this conflict? Will we see a quick resolution, or should we expect this to be a long, drawn-out affair?
When it began on the 24th of February, when Russia invaded Ukraine, the expectation on Russia's side was that it would be a very swift victory. And here we are almost a month later, and there has been no victory so far. And the Russians clearly need something to show, the Russian government needs something to show the population, because otherwise, what was this all about? Something that has cost thousands of soldiers' lives already. So that is to say, there won't be a swift resolution to this, neither on the battlefield, because the Ukrainians are putting up great resistance still after these 4 weeks, nor in the negotiations, because the sides they haven't reached any sort of agreement to date, even though Ukraine has said it won't insist on joining NATO. So we will keep going for at least I would expect until the end of the month, much to Russia's detriment and even more to Ukraine's detriment.
Elizabeth Iscredi in New York. Talk to us a little bit about the timeline of this. You said there wouldn't be a swift resolution, but you do start to see countries making moves to kind of reduce Russian dependence. Germany, of course, front of mind, trying to negotiate alternative sources of gas in particular. But there's infrastructure there that needs to be built up, and that takes years. Can you speak to us a little bit about what the interim looks like until that infrastructure is built? How much longer can that dependency really last?
That is the great challenge we're in, and I'm glad you brought this up, because it's easy to say, well, we have to stop importing anything, well, every conceivable good from Russia. Well, what are we going to do in the meantime, especially in energy? And that is the great dilemma, and that is why so many people have been saying for years we shouldn't be dependent on Russian energy. But it was there, and Russia wasn't making belligerent moves and not making belligerent moves of this magnitude in the past decade or so, or indeed since the end of the Cold War. So that makes it almost impossible for most countries to cut off their dependence on Russian supplies, especially energy. And there is another thing, which is the Western companies leaving Russia now. I know lots of people are criticizing them for not the remaining ones for not saying they'll be leaving. But the moment they leave, their assets are in danger, which is what's happening already to companies that have said they will be leaving. So it's leaving or cutting your ties to Russia isn't as easy as just saying you will do that.
Elizabeth, final quick question from me. The West is rearming. Europe is rearming. Germany is rearming. There is significant concern when it comes to many Central and Eastern European countries that they could be next. Given what we're seeing on the battlefield in Ukraine, how realistic, how high is that risk?
This is the paradox of today, that because Russia is so tied up in Ukraine and because it's not going well, it's extremely weak. And what we have seen is that the Russian armed forces are not as good as we thought they were. So that means that actually this war means there is less danger the Baltic states and Poland and other neighbors in the immediate future, simply because Russia is so bogged down in Ukraine. In the longer term, though, there's a bigger threat, because Russia, whenever this war ends, Russia will lick its wounds and say, "Whoa, what went wrong there? We better do better. We better improve our performance for next time," and that raises the stakes for its neighbors in the region.
Well, Elizabeth Braw, thank you so much for your time. She's a resident fellow at the American Enterprise Institute. We always appreciate her expertise. Well, coming up, we'll turn back to the markets as U.S. stocks reversed gains and yields continue to climb higher. We speak to Hannah Gooch-Peters of Sanlam Investments next. This is Bloomberg.
All day yesterday.
"18 minutes past the hour. Let's get back to our question of the day, if I can get it out. Do you buy the bounce that we've seen over the last few sessions in equities? We know that Kriti is now massively bulled up. She's completely front foot on this one. Let's go. But let's ask Hannah Gooch-Peters of Sanlam Global Investments on her take on what is happening here. So we know Kriti's view. What do you think? Massive rally last week. Does it carry on? Do I want to buy into it, or do I want to sell it?
I think now's the time to focus on really careful stock selection. If you look under the hood in the US in particular, in the IT software space, you've seen some big pullbacks, so 25 to 30% in very high quality names such as Intuit Software, Adobe, and you will see also the collapse we've seen in PayPal this year, for example. So actually we're starting to see some really exciting opportunities, but let's not get too keen when we've seen sort of 10% bounces in some of these names in such a short amount of time.
Well, Hannah, you seem to be the exact opposite of what I am. You seem just a little bit cautious, which I think is fairly consensus at the moment. You are starting to see just the wall of worry kind of take over investors' minds. I'm curious, though, what would flip your opinion here? What are you looking for to be more confident on the markets?
No, look, like I said, we're seeing some tremendous opportunities, but we've got to remember that we're coming off a very, very high level in terms of valuations, particularly in the US. And so a sort of less than 10% pullback on a headline basis is not enough to take us back from what's actually been all-time valuation highs based on a number of metrics. So I think what we have to do, like I said, is focus on careful stock selection. There's some really interesting things starting to open up underneath the hood if we look down on a security level basis.
Do I need to wait for the earnings season? Because at the moment it feels like it's really macro. You're basically getting some really big swings, whole sectors being tugged around, as you just said. You're not getting granular. It feels like that everything is macro. So do I need to wait for the earnings season before I can get macro? Can you get macro now? What's your degree of certainty when it comes to single stock selection?
Look, I think what you've got to do is look at stocks on an individual basis and make sure that you maintain your long-term time horizon. That's what's important for us. I think investors are getting increasingly short-term focused. And I think what we've got to look at now is we're seeing companies, like I said, in the US, in the software space, for example, and also in places like China, that are trading on valuations that we haven't seen in some cases in numbers of years. And so if we look past the short-term volatility in these names, some parts of investor fears around interest rates, for example, or regulation, we're starting to see on a long-term potential for these stocks very good growth trajectories for them.
Let's go macro here. As Guy points out, it does seem like it's a macro-driven kind of environment. I'm curious where the oil story, the commodity story plays into the underlying thesis here. Is there a point where the market gets a little bit more comfortable perhaps with consumers in the United States and Europe weathering some of those commodity shocks?
No, look, I mean, I think if you look at the energy sector in particular, it's up 25% year to date. And while investors are busy focusing on that, which actually makes up such a small part of the market, they're ignoring other parts of the market, which are starting to become a lot weaker. And actually what you need to do is look at the long-term fundamentals, look at high-quality companies. And while people are busy focusing on inflation, input costs, for example, you're seeing these high-quality companies take these short-term hits in places like Estée Lauder, but have very high-quality brands, places like L'Oreal listed in France, that have very, very good long-term potential and have been trading on expensive valuations. But just while we have this short-term focus on other parts of the market, now is the time when we can start to be more aware of the parts of the market that have pulled back and look at these discrepancies we're seeing.
Does the volatility affect you in any way? In theory, you get twice the dispersion, you should take half the risk. I simplify for brevity. But when you think about your risk management tools, what is the volatility that we're seeing right now and these huge swings doing to that?
No, so for us, we typically participate in a lot less of the downside of the market, and that's because we're looking at companies with very predictable earnings streams that have good balance sheets, and they typically weather volatility a lot better than some of your companies which, for example, have no earnings at all. I saw today that the NASDAQ, 40% of the NASDAQ has no earnings at all, and you've got half of that index is down more than half from its 52% high. If you don't have valuation support, and you don't have sustainability of earnings underneath, these companies do not weather volatility well. A boring company like Johnson & Johnson, 5% top line growth, 6% free cash flow yields will not suffer the drawdowns, shouldn't suffer the drawdowns that these other companies are pulling back sort of 50-60% plus through this volatility.
Hannah, you mentioned looking for stocks that have that fundamental narrative to it. Let's talk about defense stocks here. Naturally, we know the geopolitical tensions around the world, a lot of countries looking to perhaps build up their arsenal, and defense stocks, even cybersecurity stocks, getting quite the bid. What is your take on the sector?
So we've seen huge moves in this sector year to date. One of our top performers actually in our portfolios is a company called General Dynamics. It's up 15% year to date. It's done exceptionally well for us. It's, it's front and center at the minute of all the news. And of course, you've got this cyclical part of the business as well in the aerospace division with the Gulfstream, which meant this company was trading at very, very depressed valuations throughout 2020. Now, of course, it's very topical and the sentiment on this change. The stock has done exceptionally well in the short term, but it was perceived to be too boring before, I believe. I mean, its marine segment of it was very long-term defense contracts. It's growing slowly, but it's very, very predictable. And those predictable earnings now are looking very compelling to us over the long term. But in the short term, this company has had a very large move, in particular about 30% since the end of November last year. And so that valuation gap is closing.
I'm trying to think of the companies you've mentioned. And on balance, I think probably you've talked about more US companies than you have European companies. Is that for a reason? Is there more opportunity in the States right now than there is here in Europe?
I think we have seen some larger opportunities in the States, and I think maybe it's becoming more obvious because we haven't seen them in quite some time.
Right.
And so you're seeing sort of 25-30% pullbacks, and like I said, companies like Adobe haven't seen pullbacks of 70% in something like PayPal. We haven't seen in a huge amount of time, particularly March 2020 probably. And so what's starting to be interesting now is because we haven't seen that sort of volatility in the US market, the opportunity to get into those names hasn't quite presented itself to us yet. But that said, Europe has seen a stark pullback, obviously, on the Ukraine crisis. And
fully invested?
We are fully invested, yes.
So how do you If there are more opportunities, how do you take advantage of them?
Like I said, company like General Dynamics is now trading around our fair value after a 30% lift from the end of November. Company like Anthem has done exceptionally well. It's outperforming the market by around 10% year to date. Still has about 6% free cash flow yield, but this is a company that's up about 50% since the start of last year. It's done exceptionally well. We'll look to take away from names which have done very well for us that are trading above our assessment fair value and enter into names where we see that margin of safety.
Okay, I've got 10 seconds left. Which names are trading ahead?
Like I said, Anthem and General Dynamics are some of our winners here to date.
Okay, fantastic. Hannah, great to see you. Thanks for stopping by. Hannah Gooch-Peters, Global Equity Investment Analyst at Sanlam Investments. Okay, what have we got coming up for you? The price of oil rising again today. We're up quite sharply. Aluminium is also up. Aluminium, yes, not aluminum. We're going to take a look at what is happening with the commodities space next. As you can see, New York crude, WTI up by 5%. Aluminium up by 4.5%, but nat gas actually down quite sharply today. Anyway, commodities next. This is Bloomberg.